The clock is ticking toward the July 1st deadline for renewing the North American Free Trade Deal, but our featured guest today says there are some myths around that date that investors need to be aware of. Joining us now to discuss is Christian Medeiros, VP, Director, and Portfolio Manager for Asset Allocation with TD Asset Management. Christian, great to have you back on the show.
Thanks for having me.
Let's talk about these myths. People hear deadline. We're all used to deadlines from school, from work. July 1st, you're like, oh my God, July 1st, just a couple days away. What are the myths around this deadline?
Yeah, so the first myth is that a lot of people believe, the media believes, or at least it's portrayed sometimes as July 1st being almost a referendum, whether we continue USMCA or not. But that's not really the case. This is just a review period that was written into the original agreement that come July 1st and the months preceding it, all the parties to the agreement can either choose to extend it for another 16 years or they continue this review period for a 10-year period. So all it does is really kick off a review period that was already written into the agreement. And then the second myth that I'd want to highlight too is that I think there's a broader trade issue here beyond USMCA. For you, most of Canadians trade with the US. A lot of it is already subject to USMCA. We're not having any impacts on tariffs on the USMCA trade. It's the sectoral tariffs on auto, steel, aluminum, lumber, where Canada is feeling a lot more of the effects. So there's actually two different trade issues that are really being negotiated now at the same time.
So what is the view of how we progress from here? We're simply a review period. Obviously, there's some contentious issues on both sides of the border. How do you see it playing out?
Yeah, so the way I see it playing out is that we're into this review period, and we'll have a prolonged period of review between Canada, United States, and Mexico. The U.S. has already laid out the concerns that they have with the free trade agreement, and they're having active conversations with Canada and Mexico on the same. And I think that will take some time, but eventually we'll get to an agreement, or we'll continue in this year-to-year review period. The third myth is that the withdrawal mechanism for USMCA is something that could have been done at any time. It just requires 6 months notice from any of the parties to the agreement. So what that means is that just because we hit July 1st doesn't mean withdrawal is now suddenly on the table. Anyone could have withdrawn at any point in time. And given how important trade is to all the countries involved, how important affordability is to all the countries involved, how important the trade agreement is to U.S. corporates and their positive comments on USMCA, I don't believe that withdrawal is a very likely scenario. So I see a prolonged period of negotiation and review, likely resulting in a final agreement that looks somewhat like today, but maybe with a couple sidecar agreements on rules of origin, supply chains, and other issues that the U.S. wants resolved.
I was going to say, let's break down some of those sticking points now, because if there are areas of contention, then we're going to see headlines where you might have, a partner, probably not us, but probably south of the border, threatening just to scrap the whole thing. Yeah. We don't need you anyway. What are we really sort of getting at here? What are the tension points?
Yeah, when it comes to U.S. and Canada, I think the overall tension points from the U.S., they want more rules of origin for U.S. goods. They want more goods made in the North American Free Trade Pact to come from the three countries involved. They want some things around defense, critical minerals. But where they have issue with Canada, I think they're all issues that are very solvable. It's issues around digital services. It's issues around retaliatory tariffs that Canada put on the U.S., which of course would be rolled back in the event of an agreement. And it's a couple minor things on how dairy is enforced as well. When I look at those issues that the U.S. has, they're big trade stressors, but it's something that I believe that trade negotiators could come to. They're not insurmountable obstacles, and those are the things that the U.S. is going to want to kind of get some resolution on. But what Canada is going to want is to have those sectoral tariffs on key industries like auto, steel, aluminum, lumber that are really suffering most of the pain of tariffs. They're going to want some clawback and reduction of those tariff rates to help Canadian industries. So that's where the two fault lines would be on either side of the debate.
When I think about how these negotiations are structured, there are professional negotiators in a room trying to hash out very detailed documents, and then there's political leaders who will make a lot of noise and feel like we're pushing things to the brink. As investors, I think that latter part, political leaders make a lot of noise, seem like they're pushing stuff to the brink, can get us a little off kilter.
Yeah.
What do we think in terms of investors? How do we need to play this through?
Yeah, of course. I mean, for investors, the White House has been an X factor for the last couple of years since Donald Trump took office. So, White House is willing to make more bombastic statements. They're willing to take negotiations to the brink. So it is possible at some point they could threaten to withdraw, but I don't think that they would actually follow through with that because it'd be very damaging for their own economy. But I do expect there to be a lot of noise and headline risk as we go through negotiations. And that's not new. When it came to the first USMCA negotiation several years ago, or NAFTA negotiations a couple decades ago, both of those went down to the wire too. There was a lot of debate, consternation. Canada came to the table at the very last minute for the first round of USMCA. So I expect it to be noisy, expect there to be headlines, but I do think there's a path to resolution. And we should keep in mind, too, that the current status quo is an okay one, but Canada's going to want to get resolution on those sectoral tariffs to really help our more affected manufacturing industries.
Investors pay attention, and we can get sort of nervous about all this. Are markets paying much attention to this at all?
Yeah, I think it was a market concern maybe a year ago. I think on
Liberation Day.
On Liberation Day, and even in the early part of the Trump administration, many people were surprised that their tariffs against Canada and Mexico were the first off the bat, right? I think since then we've seen a lot of Canadian cyclical sectors, Canadian banks do very well. The concerns that those companies had around USMCA stress have kind of whittled into the background. So I'd say at this point, a lot of the risk is not really being priced into markets. So these headlines could be, a short-term volatility that we should be wary of. But I think that we should also pay attention to the medium and long-term picture, which is Canadian growth has been a little bit lackluster. A lot of it's been lackluster because we need more productivity, more investment growth, more corporate confidence, and that's what's been really lacking in Canada. So if we do have some resolution on the trade file, corporates get more comfortable reinvesting in the economy again, fiscal policy can continue to follow through and galvanize even more investment for private sector, that could be a really positive tailwind for Canada over the medium to the long term. So it's really the lifting of uncertainty that's going to be positive for Canada. And then for those affected sectors that have been suffering under higher tariff rates, that are not carved out of USMCA, they'd really stand to benefit from resolution as well.
When we think about the bluster that comes out of Washington, and from the Canadian point of view, it can upset us. But I think, too, of what our Prime Minister has said in terms of the fact that perhaps they're not the partner that they used to be. There can be middle powers in the world that can come together. Canada's efforts to sort of not completely decouple, but not be so reliant on the U.S. Can we make any progress there? Have we made any progress?
Yeah, Canada's made progress. So we used to be reliant on U.S. trade, maybe 75 to 80% of our trade was reliant on the U.S. That's come down by maybe 5 to 10%. So some progress. They're signing a lot of free trade agreements with other countries. They're sending trade missions abroad. So there's progress. But is that sufficient? I think it will never be sufficient because just by nature of geography, by how big the U.S. economy is, how intertwined we are, we're not going to wholesale replace the U.S. So that will continue to be Canada's most important trading relationship. And so getting a resolution there and having good progress on the trade file is still absolutely pivotal for the Canadian economy.